The monumental public market debut of SpaceX, which famously minted thousands of new employee millionaires overnight, has reignited a fierce national debate over extreme wealth accumulation and income inequality. Amid calls from various political figures to aggressively tax or entirely eliminate billionaires, high-profile investor and entrepreneur Mark Cuban has stepped forward with an entirely different perspective. Rather than penalizing ultra-wealthy founders out of existence, a move Cuban warns could destabilize the broader economy, he is championing a targeted tax incentive designed to structurally rewrite how corporations distribute wealth to their workforces. Cuban's proposed model focuses heavily on widespread employee equity, arguing that the most effective way to bridge the growing wealth gap is by ensuring that every worker, from the CEO down to entry-level support staff, holds a direct financial stake in the companies they build. Drawing from his own entrepreneurial background of distributing equity across his ventures, he suggests tying favorable corporate tax rates, such as a reduced 21% bracket, to a mandatory proportional equity sharing structure. Under this framework, if a chief executive receives stock options or warrants proportional to their total cash compensation, every employee would be guaranteed an identical proportional share of stock relative to their own earnings. This discussion has drawn sharp contrasts with other approaches to wealth redistribution, such as proposed state-level wealth taxes and aggressive progressive tax brackets that critics argue would stifle venture capital and private investment. Pointing to the recent windfall experienced by thousands of SpaceX workers through broad equity participation, proponents of employee ownership argue that aligning worker compensation directly with corporate valuation can fundamentally alter economic mobility. As policymakers, executives, and financial analysts continue to debate the future of capital,